Well, it's time for another CRA tip. So I wanted to share a story where a HUD member spent about a good year prepping for their exam. They were newer to the CRA and they were taking copious notes on the training and implementing all of our tools and really working on community development loans. Because as you know, the majority, if not all, the banks underreport community development loans. And so she spent a lot of time shoring up the processes and workflows and focusing on identification and engaging with the commercial lenders and then documenting. And so she spent quite a good amount on, of course, affordable housing and then economic development. And so she was really proud because through the training in the CRA Hub, she was able to identify so many more activities. And so she was feeling quite confident going into her first exam. Well, then I get this call. So when you're a Hub member, you get a direct line to me during an exam because that's one of the ways that I serve. And she was like, I can't believe it. They are questioning my community development loans. And the ones that I felt were so cut and dry, they are questioning. And she was really disheartened. And I asked for a little bit more information. And she indicated that they were challenging the use of HUD Fair Market Rents. And that, as most of you know, is something that is still under the 1995 rule, a method, not the only method, but a method that a lot of banks use to qualify community development loans as it relates to affordable housing. So, as you know, we're not actually verifying the rent of a unit. So, we're allowed to be reasonably certain that the primary purpose is community development. And so, since there's a gap in the guidance from the regulators on what constitutes true affordable housing as it relates to community development loans, we have to do our best. And so, again, there's two generally accepted ways of approaching, and one is using HUD Fair Market Rent, and the other is 30% out of the cost of housing, and verifying that truly low to moderate income people and families are renting that unit. So we get to be reasonably certain. So anyway, she was really concerned and frustrated. And so we talked and we came up with a game plan to email the examiner and to share. This is the process that we've outlined through our policies and procedures. And this is the methodology we use and the methodology that's used with other regulators across the nation. This is how we document affordable housing as it relates to community development loans. And so we had precedents and we had examples from banks across the nation. And so we restated, again, the policy procedure, the approach, and then asked the examiner to respond with, has there been a policy change? Are we not allowed to use this anymore? And to ask for documentation so that this banker could be clear, because this is something that in fact was used during the last exam with the same regulatory oversight. So asking respectfully what has changed, this has been our approach. We want to get this right. We want to make sure that we're identifying community development loans with certainty. And so, can you give us some thoughts? And all of this was in an email just to get feedback. So, she was able to work with the examiner as well as the examiner in charge, the EIC, to re-clarify that that is, in fact, an acceptable method. And I believe at the end of the day, it was an examiner that was a little green and was, seeing that more banks were moving to the 30% of housing threshold as the documentation. And as you all know, we've gone through various iterations of proposals around affordable housing with the modernization efforts as of late. But now that we are assuming, the 1995 version of the rule, there are gray areas. And so I can't promise you that the use of HUD fair market rents for affordable housing for community development loans is the perfect way and the perfect path going forward. I can promise you this, that many, 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 and most banks across the nation are using this metric to justify and to document community development loans as it relates to affordable housing. So just wanted to share one of those tricky points and, a lesson learned for this banker as she was navigating her first CRA exam. So again, what we did is we clarified and shared our methodology and our intent and our interest in getting it right and having a documented conversation, if you will, and exchange between the regulators so that this bank can move forward with certainty going forward. Oh, so I forgot to tell you that yes, the examiners did allow for this banker to use HUD Fair Market Rent, and the regulator did confirm that that's acceptable for their current exam, but also going forward. So that may or may not be the case for you, but I'm happy to report that she was able to move forward with confidence and to get the community development performance counted during that exam. So I hope this is helpful from a CRA tip perspective. I hope that your exams flow nicely and that nothing large trips you up. And we're here for you if things go a little south. We help you work through those tricky situations in the CRA hub. So I hope this was helpful and an aha moment. And there's always an opportunity to learn and to grow. Been doing this for 32 years and I still learn and grow through all of your work in driving impact across the nation. So I hope that was helpful. Until next time, bye for now.